Futures rallying to begin this holiday shortened trading week. Take a look at this. We've got the Dow up 248, S&P up 63, NASDAQ up 339. Now, investors did rotate out of tech over AI valuation fears last week, and that was the sell-off that we saw. We also had news that OpenAI reportedly is in talks how to delay its IPO until next year. No confirmation yet from them. SpaceX set to join the NASDAQ 100 for trading. That's July 7th. One of the fastest additions we've ever seen to that index. And then Anthropic is also looking at an IPO. Its Mythos 5 model now cleared by the U.S. to restore access to certain trusted partners after the Trump administration raised security concerns. And the Wall Street Journal out with this new piece. China has matched Anthropic in cybersecurity, resetting the AI race. And they write that China's new ZAI model could rival U.S. models in finding security bugs. Let's bring in Heritage Foundation Chief Economist and Unleash Prosperity Senior Fellow, EJ Antoni. EJ, there's also this, kind of with all the AI news that's been breaking recently, that Politico is reporting now that California Governor Gavin Newsom just struck a deal with Anthropic to allow Claude to be used in state government agencies. So the news is just really changing when it comes to AI.
No, absolutely. And it's not just, day by day. It's not a 24-hour news cycle, right? This is a minute-by-minute news cycle, which I suppose is fitting for such a fast-developing technology. But I think a couple of things on AI. Number one, I think a lot of the fears are overblown. I think competition within this market is going to be an incredibly good thing, so I look forward to more of that. And I don't buy the whole narrative of this is just going to wipe out a third or two-thirds of all jobs, different estimates people have thrown out there, and that somehow all these people are going to be out of work. Look, every time you get one of these disruptive technologies, sure, it does eliminate some jobs, absolutely, but it always ends up creating more than it eliminates. I mean, how many people, before the invention of smartphones, how many people were app developers? How many people were driving for Uber, right? Again, all these different things, all these different jobs were created out of a new technology. It's exactly the same thing that's going to happen here.
But Lee, the concern here is national security, and that's what we've been talking about this morning. And by the way, I'm just going to raise this. Seems a bit political of Gavin Newsom when the government, the U.S. government, and especially the military have been having these problems and concerns with Anthropic. That now Gavin Newsom says, oh, I'm going to bring in Anthropic into California state. It seems like a political move to me. But again, national security is the bigger picture.
I mean, it certainly does seem like it. Perhaps it's a political move, but you've got to look at this a little bit differently, because when you look at regulation, when you're talking about just innovation and just technology company and free markets on its face, it's a very different conversation when you're talking about something that impacts national security. AI impacts national security. If we lose our edge to China, there's a big difference here than if you're talking about other things. And so a lot of people are saying, let's hold AI back, let's make sure it's, but I think what's less safe than us holding back here and dealing with all of that is allowing this to get in the hands of China. Because it's not just about chatbots. This is about what AI can do in terms of hacking into systems like, banks, infrastructure, the electric grid, all of these things. We know that there's a lot of activity out there, and it's really scary. If that gets in the wrong hands, we could be in big trouble. So we have to look at this, I think, very differently than we would just regular technology, don't you think?
To a certain extent, absolutely. But at the same time, send a thief to catch a thief. In other words, the same technologies that are so good at breaking encryptions are also going to be so good at creating them. And we've seen this. This is the whole history of warfare, both kinetic and technological. It is response and counter-response, right? Every time someone develops a better lock, a lock picker comes along specialized for that, and then you have to develop a new lock to counter that, and so on. So I think although the battlefield may look different this go around, I think the basic principles here are essentially the same.
Interesting. I do want to get your take on the economy, inflation. There's a lot that's happening with that story right now as well. Let's take a look at oil. So we're a little bit higher this morning, but we're still above 70 for both WTI and for Brent. But obviously, we're watching the U.S.-Iran negotiations. Fox did confirm both sides are standing down on any strikes. President Trump says this morning, and he actually posted on Truth Social, that Iran requested a meeting. That's going to take place tomorrow in Doha. The president posted on Truth Social, WTI crude $69 heading down. This is less than it was prior to the start of the denuclearization of Iran. And he also wrote that gas prices are coming down fast, report any abuses at the retail level after previously calling on big oil to reduce price at the pump. He did that last week. So right now, here's gas. So we're at $3.86. We're down from $4.39 just a month ago. So we are seeing that inflation, that energy price shock fall pretty quick, to the president's point. The next question mark is the data and how that's reflected in the data. What do you see happening?
I see, in a lot of ways, a repeat of COVID. In other words, you have a supply shock, and it's going to filter through the supply chain to all different aspects of the economy, and different aspects of the economy are going to take different amounts of time. In other words, you initially see things like transportation costs go up, but we're also seeing inputs for plastics, for pharmaceuticals, all kinds of things, you name it, also going up in price. So you're going to be dealing with price shocks basically the rest of the year, even into next year. The mess that happened in fertilizer is another great example. So we'll see higher food prices as a result of that. So yes, gasoline will come down, diesel, jet fuel, et cetera. They're going to come down right away, but it will take a lot more time, and you're going to have an economic impact, therefore, for all these other prices throughout the economy to also come down as well.
Yeah, no, and we had Jay Hatfield on the program in the 6 o'clock hour, and he said his data tells him we're already at 2% inflation. That's the Fed's target. Kevin Warsh, that's where we want to be.
So the other inflation whack-a-mole that just popped up is the cost of memory. And so if we saw Apple raising the prices of all its devices because of the spiking cost of memory. There's some rumors of a Chinese company, not rumors, but there's the hope that a Chinese company will come on and be able to create some consumer DRAM. Do you see this being a big inflationary problem for the rest of the economy and push CPI and PC and that sort of thing beyond? Do you see this as a lingering problem that's going to get the attention of the Fed?
I think so, absolutely. It's not going to be the major driver of inflation. You can look at things like M2 to find that, but it is definitely becoming a problem, and you can see that especially in the producer price index, not necessarily in the CPI yet, where you're looking at a cost that was flat for over a decade, and now all of a sudden is spiking. It's going through the roof. So look, we've seen Apple raise the price of some products as a result. A lot of other companies are going to have to do the same. This is going to get passed on to the consumer, absolutely.
EJ Antoni, it's always great to see you on the program and in person. All right.
My pleasure.
Always a pleasure to see you in person. All right. Thanks for being here. We'll be right back, everybody.